Why does the markets move? When does the markets move? How to enter when the markets move. The first question is why, and that was covered in module 1. The fundamentals is why the markets move. When does the markets move? That's covered in module 2, which is timing. How to enter when the markets move. That's covered in module 3, and that's technical analysis. So we are teaching you the important aspects of the market, the core foundations of the markets. And as you will progress through the end of the course, you will have a professional approach when looking for trade opportunities. So let's get down to business. In module 2, so we're going to be going over participants, the key players, business acumen, going over having a business mind in trading, volume concepts, basics to advance, volume weighted average price, volume profiling, volume strategies, and COT reports. And then we're going to put it all together at the end. That's going to be the overview of module 2. So what is volume analysis and why do we use it? So volume is a quantitative measure in which tells us how much shares or contracts are in a given market. So let's head over to the whiteboard. So if we have 10,000 contracts in oil, right? And we have 100,000 contracts in gold. Looking at this, we have more volume in gold compared to oil. So gold would probably move a lot faster due to the amount of volume compared to oil. So we are looking at a higher volume ratio compared to oil. So I would put my money more in gold as this will have more liquidity, and based on any fundamental news, we would have volatility. So we're using volume analysis for a timing mechanism, not as a trade idea. So if I saw this, 100k gold, 10k oil, I wouldn't use this as a trade idea. This is just timing. So I know, okay, there's 100k contracts in gold and that's ready to go. There's money already in the market. Someone's already put money in buying or selling based on fundamentals already in the market. So there's volume already in there, which will then push the market. Our fundamental bias will tell us to go. Volume analysis is hardly used amongst retail traders. We have to ask ourselves why. Why isn't volume taught? I'm not talking about the OBS or any of the standard indicators that are out there. I'm talking about real volume. Why isn't it taught? You know, why doesn't retail brokers teach you these? Because retail traders will only teach you support, resistance, and trend lines. So it's time to break the ice and have a deep dive in volume analysis. Yeah. So a volume analysis can be used to confirm strength of a bias if you're buying or selling based on fundamentals. Again. So if we have a trend here, and then it starts going up, up, up. We start seeing the volume spiking here. And then you get the big volumes coming in. This will confirm that the trend is getting strong. Okay. So we had a consolidating area here and then a push up. Our volume is pushing price up and confirming the strength of the trend. And same again if we're selling. So there are certain laws to supply and demand. So if demand was greater than the supply, then price will rise to meet the demand. Yeah. So if the demand is greater than the supply, price will rise to meet the demand. Okay. And the other law is if demand was less than the supply, price will fall. We look at overall global supply and demand. So if this meets our global supply and demand, then we'll see volume being injected. Yeah? Because the higher the volume, the higher demand. Right? So there's 10k contracts out for oil. So the demand isn't as great as gold. So we can tell if there is a demand based on volume. Some traders use volume price analysis. But why limit yourself to just price? Yeah, we're going to look at the overall. So we're going to cut out the price and we're going to look at the overall volume analysis. Yeah, so we're going to look at the timing process, the price, contracts. We're going to look at the whole overall volume, not just limit ourselves to price. Okay, a lot of traders always say price action is king, but you have to think about this. What precedes before price? Yeah, what pushes price? And that's volume. Going back over here, that's volume. Yeah, so volume precedes before price. A lot of traders only use price action without thinking that without volume, price will not move. If there's no volume, yeah, say if you had 10k contracts and you had no volume, yeah, very low volume, will price move? Probably not, it just consolidate. You need volume for price to move. If you're a technical trader, then yeah, then price action and market structure is king. So every action must have equal and opposite reaction. And what I mean is price action must reflect volume. So volume equals effort. And the result is the price. The volume analysis can be used in any trading markets, for example, futures, options, forex, stocks, etc., etc. So volume will show activity and volume validates price, right? That was a introduction to volume.